So it's advised to always analyze from a high time frame. Whenever you want to look out for trade opportunities, it gives you a clearer directional bias. You know what to expect of the market overall. So this 10 index on the daily time frame, and you can see the clear structure. Market has been on the bearish structure, created series of lower highs and series of lower lows. So we can identify these highs and lows, we can spot them out. I've showed you guys how to spot out these highs and lows and how to confirm these highs and lows. All you need to do is to check the price value of these highs and lows to confirm if they're higher than each other or lower than each other. So in a situation whereby the highs are lower than each other and the lows are lower than each other, it's basically a bearish structure. So we've got series of lower highs and lower lows formed. We have a high here. I don't think we actually need to start spotting all of these out, but let's spot out a few. Got a high there, another high, lower high, lower high, lower high, lower high there as well, lower high, and series of lower lows. So these are the markets formed these highs and lows all through to this point, So we got price from series of lower highs and series of lower lows, and we had formations of levels and zones which we have to identify as well. So after spotting out the market structure, confirming the market structure, and we can see the market is clearly bearish with series of lower highs and series of lower lows formed, the next thing we have to do is to identify the major levels and zones formed on this time frame. The historical levels, basically levels where we've seen price react on either as a level of support, level of resistance, or a key zone. So we have this to be the highs in the market. Let's call this the highs, a level of resistance basically, though this is the highest high on this time frame, the level of 6,557, these highs, but this is where we've got a level, this is where we've got a zone based on the past histories. Yeah, price to resistance there at this reaction, resistance as well, resistance. So this is the last test of this level before we had this decline in price value. So that's for that level. The next level we have is this level based on past history, support, resistance, support here. There was a break, retest, resistance. So these levels are actually far from where price is trading at. It may not really be necessary to start spotting out these past levels because it has nothing to do with your analysis at the moment. Our point of focus and interest is actually on this current zone, is on this current market structure and data. Yes, the market is bearish overall, but we can't be dealing with these levels up. They are very far, but you can still spot them out if you've got time, but it's not really necessary. The levels we should focus on is the levels in this area or close to this area. Yeah, so let's just spot a closer level. I think we have a level here. We have a level at this point. When we zoom into the chart, we'll see the reactions we've got on this level, price, both here. So resistance there. A buy reaction support at that point. So as a level, and we have another level here. Another level here. That price bought support. There was a break. This fake out buys. Let's say it's a retest here. And price dropped. So we've had days of a bearish push. Throughout this week has been bearish on this index. The daily time frame candlesticks has given the explanation and information that the market has been bearish for days, because each and every candle here takes 1 day to form. This being the daily time frame chart. So we have this to be the first day, second day, third, fourth, fifth, sixth, seventh, eighth, 9 days of bearish push to the downside, 9 days of bearish run on this index. Yeah, so market is very bearish. But one thing I need to know is if there is a level where price could possibly get to. Being that we can't identify the weekly time frame charts, so we can spot out the past data. Yeah, if I can be able to identify the past data, then I would know if there's a potential level where price could possibly get to. But at the moment, we just have to work with this structure, which is a clear bearish structure, because this platform, we can't navigate to the weekly time frame charts. The highest time frame on this platform is the daily time frame, so we just have to work with it. So back to the current market data, you can see the market is clearly bearish here, very strong of God. So we just have to proceed to the forward time frame, because we've already spotted what we need to spot out on the daily time frame, which is the market structure and a zone that was identified. these zones. So on the 4-hour time frame chart, we've got this current structure, basically a clear bearish structure, lower highs and lower lows created. So being a day trader, I just look out for day trading opportunities to leverage on. Yeah, so the daily time frame, 4-hour time frame, 1-hour time frame, 30 minutes puts me in that trading time zone and range and structures. Yeah, so this is the structure on the 4-hour time frame, a clear bearish structure. I've got lower highs and lower lows created. You can still spot out the highs and lows. Have this to be the first high, second high, lower high, lower high, lower high, lower high. We've got a low, lower low, lower low, lower low, lower low, and the last low. So this for this structure, a clear bearish structure, lower highs created and lower lows created. So we've acknowledged the market structure on the 4-hour time frame chart. The next thing we have to do is to spot out the levels and zones on this 4-hour time frame. Yeah, the levels and zones formed on this 4-hour time frame, the historical levels basically. Though we've not really had any long level, but any extended level, and you put it that way, where you have some levels your price has reacted to. So we've got this as well. Not really an extended zone, but you can work with it based on the past histories we've got on it. Price has at least bought or sold on this level, so we can spot it out as a potential reaction zone in the market. Like I said, historical levels can be used as potential target points. It can be used as additional confluence to our trade zones, so our buy and sell points. Yeah, so the 4-hour time frame chart looks good, a clear bearish structure, but we have this to be the last zone, which is expected for the market to like retest, then it gets the bearish continuation, at least price dropping back to these lows based on the market structure. So this is a low broken, this is like a break of structure, or is a break of structure basically. So I expect price to trace back to these broken lows for the continuation. So the thing right now is we still have to proceed to the 1-hour time frame and other time frames to see if there is a formation, an entry formation on this expected sell zone, because that's where I expect price to retrace to before the continuation based on the past histories we've got on that level. The level of support that has been broken now turned resistant if price can give a retest of it. So this is the 1-hour time frame chart, and we can see that market is trying to push up because we've got this drop, price pushed up again, then we had another low formation, a new low formation, which is a higher low, price pushed up, higher low form. So we could see price push up to this zone, maybe for a continuation of the bearish structure, or we see price break and continue, or break and give a reversal basically. Yeah, so that's for what is likely expected, what we might see. So on the 1-hour time frame chart, nothing really interesting. There's no other block in this my trade zone. This is where I expect price to sell from based on the histories we've got. Price giving a couple of buy reactions on this level, this. So price could still come to this level for a retest, then bearish continuation. But if there is no formation, an entry formation, which is the other block, or don't be looking to get any entry on this index, I'll have to wait for the formation. So let's check the 2-hour time frame chart, being that there is no formation on the 1-hour time frame. So on the 2-hour time frame chart, what do we have? Do you have a good formation for an entry? This looks good in a way, but at the same time, the base formation has gaps, which I don't really want to work with this strongly. So, but this is a good formation because we had a good drop out of the base. This bearish engulfing candle that left the base. So what I would do in this situation is to wait for price to approach this area, then look out for an entry confirmation at this point. Yeah, if price can approach this trade zone, I'll look out for an entry confirmation, being that this is only perfect formed entry formation. Even though the formation was not perfectly formed, you could still see price react to this zone because the market is bearish on a bearish structure, and this formation was formed close to this level of support that got broken, which is likely to turn to a level of resistance if we can get a retest of it. So what do we do in this situation is to look out for an entry confirmation if price can approach our sell zone. So we have to move to the next to standard lower time frame to spot this entry formation if price can get to our trade zone. So the entry confirmation we'll be working with is reversal patterns, bearish reversal patterns basically, because we want to sell, right? Market structure is bearish overall. The daily time frame says that, the 4-hour time frame says that, the 2-hour time frame, 1-hour time frame, everything is bearish, and there's no zone spotted on the daily time frame which price could possibly get to, which price could possibly reverse from. So we could see price fall freely maybe till it forms a base, then we would not see what a reversal. But there's no base formation at the moment, so we could get the sell continuation. Is likely, it's possible to get the sell continuation because the structure is still bearish. So on the 2-hour time frame chart, we've identified our potential entry points, our trade zone basically. So we need to work with an entry confirmation, being that this other block formation was not perfectly formed. So the entry confirmation will be working with the reversal patterns, bearish reversal patterns, which can be double tops or head and shoulder. So we're going to the next to standard lower time frame, which is the 10 minutes time frame, because after the 2-hour time frame chart, the next time frame we look at is the 30 minutes time frame, then the 10 minutes time frame. So moving to the 10 minutes time frame chart, we have some good structures and formations, and I expect price to push up here from this point to this zone. And when you look at this formation, this looks good. Price could possibly move from this zone. Not a perfect formation basically, but you can see price is respecting this formation. So we could see price do a push up here because we've got series of higher lows and higher highs created. So we could just see price push up to this point, then boom, you get the drop. But on price approaching this sell zone, remember we have to work with an entry confirmation, reversal pattern formation basically for an entry confirmation. Yeah, so either a double top, which is a bearish reversal pattern, because the market formations that indicate a change in direction from a rising market towards a falling market, or from a falling market to a rising market. So for price to get to our sell zone, which is this point, there would be what? A rising market. So we need a reversal pattern formation after price has approached our sell zone to confirm that we would get the reversals from this rising market towards a falling market. So that's where would come in after the formation of a bearish reversal pattern, which could be either a double top or a head and shoulders bearish reversal pattern. So our entries would come in after price has broken and closed above the neckline of this double top. So let's assume that the pattern that would be formed on our sell zone, would be a double top. So neckline here, so entries would be on a candlestick break and close below this neckline with shorts. That's how simple the approach should be. Yeah, so the entry approach to this setup would be something like this. If you are to work with a reversal pattern formation after it's been formed on our sell zone, stop loss should be above the highs of the double top. Yeah, then target should be back to this previous lows possibly, because based on past histories, price has reacted to this level, this push from here, price pushed up. So if price can get to this level, we could still see possible bullish reaction on the approach of this level here. So it's reasonable to have your target points at this previous lows. So that's what I expect on 10 index, a retracement to this zone for the bearish continuation.